Excuse me. Good morning, good morning, good morning. Party people, how are you doing? Let's see what the market wants to do today. Give me a second, and then we gonna get to it. Go to let's get to it. Let's get to it. Let's get to it. You'll make it through it. Where can I sit this? Let's sit this there. Man, come on. Stand up, man. I don't like how that's looking right there. There you go. Got it. Now, let's see who in here before I get started. The market is moving. The market is moving. What's up here, Learn and Share? Yeah, I see a couple people in here. I just wanted to get on, man. Y'all see, I don't know if y'all saw the thumbnail. Here. Thumbnail. Why does it do this now? There you go. Y'all saw the thumbnail. And this thought was, what's up, Alpha? Alpha, are you the Alpha that was asking the questions on YouTube? You were very engaging. If that's you, you're very engaging. I love the back and forth seeking of the knowledge, of the understanding, should I say. If you are that Alpha, I salute you with both hands. I don't profess to know everything. I just share my understanding of concepts. Speaking of my understanding of concepts, this right here is stemming from what's up, Alpha? I appreciate you. It's stemming from an interaction that I had on Twitter with someone who, up until this point, I thought I was cool with. You know, for those who don't know me, I am a very petty 51-year-old man. All of this stuff right here, this is just stuff on Al Gore's internet, right? Ain't nothing about any of this stuff personal with me until you take a shot at me. And I'll let you know, the quickest way to get me into my petty bag, and then after I get my petty off, for me to block you and I never see you again, is by accusing me of defending anybody on Al Gore's internet. Anybody. If you accuse me of defending anyone on Al Gore's internet, you will get me into my petty bag, and then I will block you after I get my injection of petty for the day. Now, with that being said, being right or being profitable, what's more important? Right? And what is this stemming from? Like I say, this is stemming from, I said we're going to watch price and talk about this. All right. This is stemming from the fact that somebody I thought I was cool with made a comment on Twitter that said, ICT told everybody to short indices, right? With like a laughing face. And I said, you know what? There is a lot of people who do stuff because they think that's what Michael is doing. And they take it as he's saying do this. And if it does exactly what he says it's going to do, no one says anything. But if it doesn't do what he says it's going to do immediately, everybody wants to point out the fact that he was wrong. And it sparks the age-old question: is being right more important than being profitable? What's more important to you? Right? I'll just put that in the chat. What's more important to you? Being right or being profitable? Be honest. If being right is more important than you when it comes to trading, say being right. If being profitable is more important to you when it comes to trading, say being profitable. Right? What's more important to you? Personally, what's more important to me is being profitable. I could care less about being right or wrong. There's this thing for some reason in the trading community where everybody has to be right. Everybody got to be right, and they got to get on Al Gore's internet and shout from the high hills that they were right when it comes to something dealing with price or dealing with the market, or like being right pays your bills. Like being right, it's like I've never been the type of person to seek validation from others. Never. I've never tried to seek validation from others, because what other people feel about you, especially on Al Gore's internet, it's just like bias. It's a hussy that's for the streets. They will flip-flop on you in a minute. My block game is really strong when it comes to people on Al Gore's internet, right? And for anybody that's watching this right now, and you're just lurking in the background, and you're thinking in your head, Tim's always defending ICT. The quickest way for you to get blocked is to say that Tim is defending ICT or anybody else on Al Gore's internet. I will block you after I get my petty. I'm going to get my petty on, right? I'm going to go back and forth. I'm going to take jabs, because it's always been in me to never let anybody feel like they got one over on me. Ever since when I was in the 7th grade and Stephen Dukes told me, Tim, you know why I always pick on you? I said, no, why do you always pick on me, Stephen? He said, because you let me. Because you let me. And ever since that day, Stephen Dukes and anybody else, I never let anyone else pick on me ever again. That's why if I feel like you taking a shot at me, I'm going to take one back. And then I'm going to block you. Because I don't care. Because I don't care. What Thomas say? Trading is like being in a marriage. Rather be profitable than trying to be right all the time. You feel me? You feel me? What does it profit a man to be right all the time and lose his account? What does it profit a man to be right all the time and lose his account? Let's see what Price did overnight, man. How y'all doing this morning? How y'all doing this morning? Boop, 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 boop. What's up, Lil Hawk? You just popped in? What's up, Kenya? Y'all just popped in? Man, y'all done missed all the fun. I done went through my whole spiel. I went through my whole spiel bill about being right, me being petty, me blocking people, I done went through my whole spiel bill. Trying to keep my account and my wife. You feel me? You gotta keep both. You gotta keep both. Hey, check out what we doing, man. I gotta run it back. I don't know. I don't know if I'm gonna leave this one up, man, because I don't want nobody to get blocked. I don't be wanting people to get blocked, right? And let me tell y'all like this right here. If you truly feel like I care about what anybody on Al Gore's internet do, right? Then I can kind of understand why you would say that I'm defending anyone. I don't know what it is. I don't know what's. I guess because this man is so polarizing, right? That people just have to try to prove him wrong or show his flaws. But if you say anything that doesn't agree with the people that's, I guess, poking fun at him, they instantly say you're defending him. Kim, you always defended. When have I ever defended this man? You're speaking your opinion about what he did. I'm speaking my opinion about what he did. But you're saying I'm defending him. And people, I don't know. And it's only him. I can disagree with people on anything that anybody says, and they never say, Tim, you're defending them. But when it comes to ICT, if I disagree with what they say, Tim, why you defending this man? Tim, you don't even know this man. Why you defending him? I'm not, we can't, I don't know what it is about this guy that get people so into their feelings. It's like they try to run to Al Gore's internet and prove that he did something wrong. First of all, if you're so against him, how do you know what he even said? How do you know what he even said? Y'all remember a long time ago when I said that I was going to stop watching Market Monday because I didn't like Ian's energy? I can't tell you one thing they've talked about on that show since that day. I can't tell you one thing because I stopped watching it because that'd be my whole point. It did. And then they don't understand that if I'm using these concepts and you call people stupid for using these concepts, you don't understand why I take offense to that. I take offense to that because I'm using the concepts, and you just said people that use the concepts are stupid. So it's not defend. You just called me stupid. That ain't what happened today. The person today did not call me stupid. They just said ICT told everybody to short indexes. And I was like, I don't ever remember him telling anybody to do anything, but I got my own model. So I don't care what he say. I just think it's funny. I just think it's funny. Look at what the daily's doing. Remember we talked about we could possibly stay in this range right here. Right? It's early. It's only like the first 9 minutes so far. First 9 minutes of the morning open, but the market's been open since 6 p.m. last night, and we open here. But we're still in this range, hovering right around. We're still close to that consequent encroachment of that daily wick. Now, remember yesterday when we were saying that the market was going up at the beginning of the week. And if we go up and make new highs in the beginning of the week, we can anticipate the market coming down later in the week. If we, you know what I'm saying, push up, we can anticipate it coming down. And we was talking about how that would play into the fact that the weekly is still trying to respect this weekly imbalance. This still plays into the fact of right now I'm trading without a bias. Right now I'm trading without a bias. You know, yesterday the morning price action didn't offer anything. Like we talked about, I was like, hey, we spoke about it yesterday. Was it the 15-minute or the 5-minute? When I was like, this may be a spot to trade off of. It might have been the 5-minute. Yes, it was the 5-minute. I said this may be an area to trade off of right now, but it ain't give me what I want on the higher time frame. The higher time frame hadn't given me anything yet. Let's run it back. We were right around here, right? And when we was on the live, I said, hey, this may be something to trade off of, but right now, the higher time frame hasn't given me anything, so I don't like it right now. And at that time, this is what the higher time frame had looked like, right? This is what the higher time frame had looked like. We had this is from, I just put this on there last night or this morning sometime, so I'll take that off as not to confuse anything. But this is what the higher time frame was looking like at that time, right? We were blasting off, going up. Let's see, I got all this stuff that's hide everything, right? It was looking like this, and so we said that may have been something of interest, but right now I didn't like it because the higher time frame hadn't given me anything, right? Fast forward over here. Now let's go to the higher time frame. Now the higher time frame has given something, right? This is the 11 o'clock candle right here at the closure of this 11 o'clock candle. So now it's lunchtime, right? So now the higher time frame has given me something, right? We got a breaking market structure to the upside, taking out the prior day's high, and we got an imbalance right there. This right here is the breaking market structure because that high came down and took out that low. This right here, this is just like a shift in sentiment because that high didn't come down and take out that low, right? So now we got a shift in sentiment. We disrespect a SIBI, and we got a break in market structure, right? That's bullish activity, right? Shift in sentiment, disrespect the SIBI, breaking market structure to the upside. All right, let's go to 4-hour real quick. What's above price on the 4-hour, right? On the 4-hour, what made us disrespect that SIBI? Okay, this was yesterday. Yeah. All right. So look at what made us disrespect that SIBI. Okay, so now we're on the 1 hour. This is a 1 hour chart. All right, we come down, got a break in market structure down here. Right, that high came up, that low came up, took out that high, traded down below it. All right, here we had like a shift in sentiment, taking out that low, pushed back up to that imbalance, came down, took out that low, came down to this imbalance. Right, then we came back up, traded all the way to the top of that SIBI. Right, traded all the way up to the top. Boom. Why did we trade all the way up to the top? This 4 hour and this daily is pulling price up to it. Right? Did we hit it and sell off of it? Yes, we did hit it and sell off of it. But how far did we go? How far was the run? That's why I say there's money to, you can be wrong, right? What's more important, being right or being profitable? You can be wrong by saying, hey, I want to get short here. Get short at this order block right here. Get short at the first touch of this fair value gap. If you're willing to take all that risk, take all this heat, because your stop is going to be up there. Take all this heat and then come back down and get out of the trade. You know, I don't know how much heat you have to take to come back down to the bottom of this fair value gap or this order block, however far you going to let it go before getting out. But you can make money in that wrong move, right? You won't be right, but you will be profitable because you made some money on that short, right? Nobody can tell you how to trade. Nobody can tell you what to do in trading. It's all about being profitable. But you would have been wrong if you would have went short there. Why? Because you got a daily imbalance and a 4 hour imbalance above this imbalance and this imbalance. So this one, when it came up, touched it and sold back off, right? This one right here, if you would have been greedy and didn't take off what you could there, say, okay, it's just going to come back here, or I want to get short on this one since that one worked. Now your head bust. Now your head is bust, right? Because the daily and the 4 hour is higher than this hourly. They're above this hourly imbalance. So you should anticipate price to be drawn up to them, right? And what if price never draws up there? If you don't put no money on, you didn't lose anything. If price never draws up there, if you didn't put no money on, were you right? Yes. But were you profitable? No, you didn't put no money on it. Over here, were you right if you took a short right there? No. Were you profitable? Yes, if you took money off. But if you didn't take money off, were you right? No. Were you profitable? No. All right. So now the higher time frame is offering me something now. Right? The higher time frame is offering something now. What is it offering? It's showing me that it's drawing up to this imbalance. Right? It's drawing up. It's a 4 hour imbalance above price. There's a daily imbalance above that 4 hour. So now the hourly, the one that I submit to for my run on liquidity, sweep on liquidity, attack of liquidity, whatever you want to call it, is offering me something now. Right? So boom, it attacks the liquidity. It has displacement. We got the institutional sponsorship involved. We got an imbalance there. Okay. Then we go back down to that 5 minute. Remember I said this 5 minute right here may be something of interest, but the higher time frame did not give me anything yet. Right, so we go into this 5 minute, right? I don't know if y'all remember a long time ago in the Discordia, I said, study how price treats these 5-minute volume imbalances during the New York session. Thank me later. Right, here's the imbalance that I said was of interest, but I didn't want it because the higher time frame didn't do anything yet. And then that imbalance, that volume imbalance right there, I placed my order right there at 43.85.75. Why did I place my order there? Because this is the imbalance that I was interested in getting long off of if the higher time frame gave me something, you know. And when the higher time frame gave me something, it attacked buy side, it left an hourly imbalance. So if it come back down and I'm getting long off this hourly imbalance, I have to give it, I have to account for all the imbalances in the leg. So I say, you know what? I from my experience, it likes these 5 minutes imbalance, these volume imbalances. So I said, I'm waiting right there. If it comes to get me, it comes to get me. If it doesn't, it doesn't, because the morning had given me nothing already. The morning had given me nothing already. So I was like, I'm gonna wait right there. If it comes to get me, it comes to get me. If it doesn't, it doesn't. All right. And we fast forward all the way over here. Boom. It went all the way down and went into what? That volume imbalance right there. Look at that. Right to the bottom of it. Right to the bottom of it. Right there. Right to the bottom of it. What made me want to sit right there? One, because that morning we said, hey, this 5 minute may be something to buy off of, but I don't want it right now because the higher time frame hasn't given me anything. Once the higher time frame gave me something, I came right, and it hadn't touched it. The higher time frame gave us something, and it did not touch this imbalance. Right? What imbalance is this right here? This is the first imbalance that was created on the New York morning session. Right? This was the first institutional sponsorship. This was the first institutional sponsorship from the New York session. What is the institutional sponsorship's job? To protect the implied move. The implied move was we want to go up. This was the first spot right there. Right there. Where is the change in the state of delivery? Here's the order block right there. The first candle from the order block, this is the entire order block, but the first candle of the order block, second candle of the order block, and then mean threshold. Remember, we talked about all those these long wicks, I ignore them. So mean threshold of the order block is 43.85.50. The open of the order block is 43.86 even. The open of the last down close candle is 43.85.25. All of those are important numbers. You decide how you want to get in. I picked my entry as the volume imbalance. I go with the imbalances. I like the imbalances as my point of interest. We came back to that imbalance. Anywhere in here would have yielded a profitable trade, right? Michelle, if just cause you asking me to save it, I'ma delete it. How about that? What's up, Stock Chaser? I ain't seen you in the month of Sundays. What's going on? Right. So Um, and then Bob's your uncle on the rest of it, right? Bob's your uncle on the move. That's the move right there, right? That was the only, to me, this was the only move of the day yesterday, right? That's the move right there. That's the only move. And I only trusted it back up to this imbalance up here, right? I didn't trust it any higher because of how we was trading yesterday, right? I only trusted it back up to this imbalance right here because of how we traded yesterday. It was very, lackluster in the morning. We went up, then consolidated, came back down, went up. I wasn't trusting it trying to run, up like that. Now, excuse me. Right now we're pulling back. Price is pulling back. Oh, that's what I had started saying. Remember, I deleted something. Okay, that's the 4 hour. Yeah. So, that's what I was saying about the price. We were talking about yesterday. We could end up in this range, just staying in this range. I was like, the weekly is in between a tale of two cities, right? The weekly is in between a tale of two cities. We were starting the week out pushing up, and if we, were to continue up on Monday and Tuesday, and like set a high Monday, Tuesday, or Wednesday, we just keep pushing up, then we would anticipate maybe Wednesday, Thursday, and Friday, or Thursday and Friday to start to pull back down. Because if you, based off like the power of three, you know what I'm saying, you want to open for bullish, you want to open, manipulate down, and then deliver up on any time frame, on a 1 second candle, 5-minute candle, 1 hour candle, daily candle. If you're bullish, you want to open, manipulate down, and then go up, right? Give you a chance to get in on a discount. That's the point of the manipulation down, right? If you're bearish, you want to open, manipulate up, then deliver down to give you a chance to get in the premium. So yesterday we opened and we were pushing up. Yeah, we did come down just a little bit, right? We opened, dipped down just a little bit, and started pushing up. But in the terms of a weekly candle, if you're trying to get a discount, weekly candle, yeah, give me an opportunity to get a good discount. Give me a good discount. So, but now we're pulling back. We could just be range bound, but we still, right as of now, we're still inside. We're working on the inside day right now. We've only been here for like 30 minutes, but we're working on the inside day. Now, we can't continue up and make a new high. We can't continue down and make a new low. If we make a new low today, then the week has opened up, come down, and then what does it do tomorrow? Does it attack this daily imbalance that it left? Or does it come down more, make a new low on Wednesday, and then attack that and end the day and end the week bullish? Right? The week is in between a tale of two cities. The week is in the middle of the road. The weekly time, time frame is in the middle of the road. And look what we've been doing for 1, 2, 3, 4, 5, now working on 6 days. We've just been consolidating. Why? Because the week is in the middle of the road. Don't worry about being right. worry about being profitable. Sit down and from top down, look at price and see where price is on the time frames. Do your research when the market is not moving, so that when the market starts moving, you don't overreact or underreact to the movements. That's why, if y'all haven't noticed, right, on these late night live streams I've been doing and these morning pop-up live streams I've been doing, you know, I know people may be like, Tim, you always be saying you ain't gonna be doing stuff. I ain't gonna be putting this before my family no more. But I make sure all of my family stuff is done, and then I may pop up at like 11:30, 12 o'clock at night. I don't care if anybody be on the live with me. I'm popping up because I want to share my thoughts. And then if I decide to save it on the public for everybody to see, it'll be there. If I only want to share it with the channel members, that's where it'll be. You know, my sweetie was like, "This is your platform. You can do what you want." And when she said that, I was like, "You know what? You're absolutely right. It's my platform. I can do what I want." It's never been about likes. It's never been about subscribe. Y'all know y'all don't never hear me harping on subscribe, like, comment. Y'all never hear me harping on that, because it's never been about that. I just want to share my understanding of something that changed my life, and hopefully I do that for hopefully I do that for some people. And again, the quickest way for you to get blocked, I don't care if you playing, the quickest way for you to get blocked is to say that I'm defending anybody on Al Gore's internet, especially another man. I ain't gonna defend nobody outside of my family and my Lord and Savior. Now I will defend my Lord and Savior and my family. Come out your mouth slick about my family or my Lord and Savior, I will defend them. Let's see what Price doing. Let's see what Price doing. Coming back up into, yeah, hold on. This is a Columbus number. Probably spam, but let me check it. Hello. Spam. They got me. They be trying to come in and see what time you gonna answer the phone, and then as soon as you mess around and answer it, then they know what time to be answering. Okay, so when I'm trading without a bias, right? I appreciate that. What are the 2 points that puts the weekly in the middle of the road? It was those volume imbalances, Erica, the ones we was talking about in the like every live stream we done did over the last few days. It's the weekly volume imbalances. Go back and look at the videos. They I can't remember the levels right now, but they in there. I appreciate that, Kenya. Even if you're wrong, I always sell one contract 4 to 5 points and leave other runners to higher, lower. That's what's up, Antonio. That's what's up. That's a good strategy. So when I'm trading without a bias, right, I look at the probability of the PD arrays, right? I look at the probability of the PD arrays, and this is like the hourly, right? This is the hourly chart, and I try to stay unbiased, right? I try to stay unbiased, and I look at what the market has going on, right? So the hourly, we came up, we had a breaking market structure here, right? Let's take everything off the chart that I put on there before, and let's walk through this. Right, I'll leave that there. So we had a breaking market structure here yesterday on the hourly. Right, I just marked that as like some buy side. Like this right here. This ain't what I intended to do, but this is what it's turned into. So bullish breaking market structure on the hourly, right? Get the context together. This is the daily chart, right? This is the daily chart right here. See that day went that high was back during this day, sometimes back during Friday. So we got a bullish breaking market structure there. This is a 4-hour chart right here from when we came up and got that bullish breaking market structure. It was on this candle right here. So that's when we got that breaking market structure there. Looking at what price has going on, right? We got a 4-hour breaking market structure too. So that's a 4-hour breaking market structure there to the upside. Now, what do we have left? This is the discount PD array right there for the move. Come here from the low to the high. That's the discount PD array right there on the 4-hour. Right, that's the discount PD array on the 4-hour. So now, if you're trading without a bias, you see this here set up, right? The Monday on the 10 o'clock candle, you see this set up. You go here. What can you take a trade toward? You can take a trade toward the discount PD array. You can take a trade toward the discount PD array toward that low, anticipating this order block to do its job right here. Why? Because institutional sponsorship has reared its head. So you're anticipating this order block to do its job. You want to see the order block do its job. Right? Are you right by buying off of this order block? Are you right by selling from up here and going to that order block? Who cares if you're right? Just understand where price is trying to get to and decide, when do I want to get in? Why? Because it's all about time and price. Right. So now this is the discount PD array in this move right here. I'm using the 4-hour there. Go down to the hourly, right? This is when the hourly presented it an opportunity to go long. Remember now, the 4-hour is presenting an opportunity to go short right here, to go short into this. This is what the 4-hour is presenting, an opportunity to go short into this. Let's do it like this right here so nobody gets confused. Let's come here. Boom. Now, get the context together. The 4-hour is given an opportunity, right? It's rejecting off of this high right here. So now that we've rejected off this high, we got displacement and we rejecting off this high. If you're in the bearish mindset, you're looking for opportunity to short to this right here. Now, on the 1-hour, the 1-hour has taken out buy side during that time right here. This is the 10 a.m. candle, right? This is the 10 a.m. candle. This is the 10 a.m. candle. This candle is not complete when this happens. This candle here is not complete until 12 o'clock. No, 10, 11, 12, 1, 2. This candle is not complete until 2 o'clock, right? Because it started at 10, right? This one started at 6, and it's complete at 10. This will start at 10, 11, 12, 1, 2. It's complete at 2. So when this happens, when the 1 hour gives you a reason to go up, this 4 hour is down there, right? It's down there, but this rejection has not happened yet. We're still moving up. This candle is not complete. We're still moving up in a way. So this move is not done yet. Right? Yes, we have this imbalance here, but this move is not done yet. And we've taken out this high. So now we got to see what price will offer in between to see if we do get all the way back down here. Now, so price is going up, bullish breaking market structure. Are you wrong for buying off this? No, because the market is in a buy program. You're not wrong for buying off of that. Let's go over here. This is when this right there is when that 4 hour candle is done. That 4 hour candle is done. And now you see the next 4 hour candle, right? That started at 2 and ends at 6, 2, 3, 4, 5, 6, ends at 6. Well, 5 o'clock. But this next 4 hour candle that started at 2 and ends at 6, now you see it leaves 2 imbalances in there. So now we got 2 imbalances and we're rejecting off of the high, right? What does that rejection mean? That rejection means I want to come back down into this range for what? We have 1 imbalance, we have 2 imbalance, we have an order block, right? Going above this high, rejecting that high there, rejecting that high there, leaving this imbalance, leaving this imbalance. That's the market saying, hey, I want to retrace back into this range. Why do I want to retrace back into this range? I have an imbalance here. I have an imbalance here. You can use that information to trade against this bullish move. Right? We're taking out this high is a bullish move. Why? Because we came down, took out sell side, came down, took out sell side, came down to this imbalance, whatever was on the daily, weekly, whatever. I don't feel like going higher now. Started coming back up, had a break in market structure to the upside, right? That's a bullish move. How far can it go? Who cares? But that's a bullish move. That is the market saying, I want to come back down here. I want to go this direction. I want to go this way, but not quite yet because it's rejecting off this high. How far down can it go? Have 1 imbalance there, 1 imbalance there, an order block there. This is on the 4 hour. How probable will this do its job? Is there a higher time frame imbalance down here? Go to the daily, right? On the daily, there's no higher time frame imbalance that's down here. So that raises the probability of these imbalances in this order block of doing its job because there's no higher time frame imbalance down there. There is a higher time frame balance above price. So there's no higher time frame imbalance below price, but there is one above price. So that raises the probability of this doing its job. Right? Who's it? It was on the 1 hour. Oh, This right here gave us opportunity to move up. I was like, that was the only good move of the afternoon. Now that we got the 4-hour time frame playing out its move, right? We coming overnight now. Time and price is everything. So now we coming into the London, right? Right here in New York, this 4-hour hadn't played out yet. We're coming now, we're coming back into the London, right? Once we get into the London, right? We get into the London. What do we get on the London? A Judas swing. Hip, 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 hip. Judas swing. Above midnight, drop below midnight quick, retrace back up, get above midnight, and drop it like it's hot. Time and price is everything. Time and price. It's set up on the 4-hour over here. 4-hour, Tim. Set up on the 4-hour on this 2 o'clock candle. When that 2 o'clock candle closed at 6 o'clock, right? It's set up showing got an imbalance here, got an imbalance here, rejecting off this high. I want to come back this way. Right? I want to come back this way. Now, here it is coming down. Where we are, where did it come to? We got the order block here. We got the imbalance there. If this order block starts, if this order block fails, I got it in playback. So I don't even know what the candle is. Look, because this is the 6 o'clock candle. So this 6 o'clock candle is done. It's 10:25. So I don't know what the next candle is doing right now. It's 10:25. So this candle is done. This candle closed respecting the order block. If this order block starts to fail, right, then what would you be looking for? Toward the lows. You got a low there and you got a low there, right? And you got a 4-hour imbalance below price. What is that 4-hour imbalance? That's the same 4-hour imbalance that we were talking about when we said I would love to see price come down and finish out this 4-hour imbalance before it proceeding up, because we had started to dilly-dally, right? It's a good thing when we don't feel imbalances, but when we come that far through it, I like to see it go ahead and take care of that. Because if we stop at consequent encroachment and go, or if we stop at the first quarter and go, like, oh yeah, this exceedingly bullish. But when we come that deep into it, I like to see it get taken care of. You don't have to. Sometime it'll leave it. Sometime it'll leave it. But right now, we're just dilly-dallying on the daily inside this range, which is dilly-dallying in this range. So yeah, I would like to see it come get that. But looking at this daily candle, it looked like that order block is doing its job. Up until that point, I don't know. Because this daily candle is showing. Go back now. On the 1 hour, we come back down to here. We got the Judas swing during the London. Like we said, time and price is everything. So based off the 4-hour, want to come back down, right? So now we've come all the way down here at midnight. We're already in this imbalance. At midnight, we get a Judas swing into London, right? We go up above midnight, drop below midnight, close on the downside of the imbalance. That's saying, I'm disrespecting this imbalance. I want to go down. How far down can it go? You have an imbalance down here. You got an order block down here on the 4-hour. Go back up. Let's go to 15 minutes, see what it's giving us. 15-minute fair value gap right there. Got a break down right there, breaking market structure, 15-minute. Come back up. I'm pretty sure some other imbalances too. When you want to get short, it's ideal to get short above midnight. Let's go to 5 minutes and see if there's anything above. Got a 5-minute imbalance right there above midnight, right? There's your above midnight imbalance right there. This imbalance is above midnight right there at the order block. That's your above midnight price that you want to get short. When is that? During London, right? It's set up in the London right there. Here you go. You Judas swing, you go up, you go down. How do you know it's a Judas swing? When you go the opposite way, you got displacement up. This should stop there. Price should stop there and go back up. It didn't. It came down and it took out that low. Once you come down and take out that low, Judas swing. Looking for an opportunity to get short above midnight. There it is right there. It's in the premium of this leg. It's above midnight. 4-hour imbalance down there is the draw. High probability entry based off the higher time frame narrative that was laid out yesterday on the 2 to 6 4-hour candle. But it didn't play out until the London. Time and price is everything. When you do your higher time frame analysis, right, and you got your level set in your head, you don't panic when you see stuff. Now I know you're saying, hey, Tim, I don't trade the London. It didn't play out for me. It ain't gonna always happen during your time frame, but the market will always offer another opportunity. I didn't get a chance to participate in this. I wasn't up for London today. I stayed up until like, I think it was like 2 o'clock. I stayed up. I was laying in the bed and, nothing was setting up. See how we was trading right here? See how we was trading around there? Nothing was setting up that I liked. I was laying in the bed playing Angry Birds on my phone and I fell asleep. So guess what? I didn't get a chance to participate in that. But if you see, look at that. What do we come down to? Let's see what we came down to. Let's go up to the 4-hour. See what we came to. 4-hour order block. We're on this candle right here. Order block. This candle came down, hit the order block. 4-hour right there. Let's go to the 1 hour. 1 hour. Same thing. Now, that right there, it would have yielded a successful trade. Now, again, this in conditions like this, you want to be mindful of what's going on, right? You want to be mindful of what's going on. Remember, you got that 4-hour imbalance down there that hasn't been taken care of yet. This is the highest time frame imbalance that's below us. There's no daily. There's no daily imbalance down here. We got a 4-hour imbalance below us. We got equal lows down here on the 4-hour with an order block down there. A lot of 4-hour stuff down here that can possibly pull price down. Right? Everything on the higher time frames are above us. So what you want to watch is, let's go back to the 1 hour. What you want to watch is, we came down, we consolidated here, and we pushed down into this hourly order block, this 4-hour order block. Right now, what you want to watch is, you want to see institutional sponsorship support the move. Right? We had a 4-hour breaking market structure that came back to a 4-hour order block. Right? It's supporting the move. We got a 1-hour breaking market structure. It's come back down to a 1-hour order block that lines up with a 4-hour order block. Thus far, it's supporting the move. Now, you want to see it push through this area right here. This is a balanced price range. It takes a lot to push through a balanced price range, meaning you need something above it that really wants to pull it. That really wants to pull it. If we can't break this and we continue to slide back down, then the likelihood of coming to this right here raises. The likelihood of coming to this raises. But right now, you want to see if the institutional sponsorship will continue to support price, to protect price as it's doing right now. It's protecting the implied move, right? It came to the 4 hour, came to the 1 hour, and it pushed back up. How many points did it rally back up? We're just going to go with 67.50, right? It came at 20 points, 20 plus points. It came all the way up to 94.50, right? Close to 30 points. 3 points shy of 30 points, right? That's a very significant bounce off of this right here. That's like they showing their support for it right now. And then you want to see it get above this to know that yes, they're really supporting this move, and any imbalances that they leave over here. Now, mind you, we got a BISI there, a SIBI there, stop there, and then we got one thus far on this hourly, we got one big candle here. It's still 25 minutes. No, yeah, 20, it's still 25 minutes left in this hour, right? Still 25 minutes left in this hour. If this candle blows all the way up there, this right here will likely be treated as a balanced price range. If we get one big candle up past both of these down close candles there, this right here may be treated as a balanced price range along with, because this is already a balanced price range because we left it. Offered buy side and sell side delivery, then we left it. If we get one big candle that pushes up past these two down close candles right there, then, and right here, you can see right here, we're starting to disrespect this order block right here. That order block is getting disrespected already. So that's 1, 2 PD arrays that we've like pushed through already. 1, 2 PD arrays we've pushed through already. Now, mind you, we're coming up on midnight, right? Could it be a good short from midnight to come back down? Yes, it could be. Will you be wrong if you took a short and came back down and got some money off of it? No, you wouldn't, because you got money. Would you be wrong to take a short off of midnight and try to hold it to this 4 hour down there and end up getting stopped out? But those just the things that go through my mind when I'm watching price. Those are things that go through my mind when I'm watching price. It's not for the faint of heart to try to trade the market both ways. It's not for the faint of heart to try to trade the market both ways. That's why I started this out saying, hey, this was what the 4 hour offered us yesterday at the 6 o'clock open, like at the 5 o'clock close. It was offering us to come down into this area here. At London, we came in at London. We came in at London. Here we go. We see this is the 4 o'clock candle. So at 5 o'clock this morning, we see that we were hit with a Judas swing. Whack out, right? Judas swing. Now now the 1 hour is in line with what the 4 hour was saying during the London, right? Time and price. So now the 1 hour is in line with the 4 hour during the London, high probability short to come to this imbalance and even the order block. But the imbalance would be because I go off of liquidity, right? So in this case, you would have internal liquidity coming to external liquidity, right? Because you're trying to get short inside the price leg here, internal, and you're targeting the low and the imbalance below it. Internal liquidity to external liquidity. Most of the time, that's what your trade's going to be. Internal liquidity, external liquidity. Price comes back, internal, above midnight, at the 5-minute fair value gap that we talked about, down to the imbalance. Took out the low right there. That's the low of this price leg. Everything from this low down is external liquidity. Got short internal liquidity, target external liquidity, leave something on for the terminus all the way down there. Hopefully this helps with anyone who's, I know when I was trying to learn how to trade, and here we go, we're steady pushing up, we're above midnight. Let's see if there's anything inside there. No imbalances on the 15-minute, got above that high right there. We got an imbalance on the 15-minute there, right? Showing institutional sponsorship. We got a balanced price range here. Remember when I told you about these overlapping imbalances, right? Remember when I say on the 1 hour, if we get one big candle, if this 10 o'clock candle closes up here, all of this may be treated as a balanced price range, because there's no need for price to come back below this balanced price range there. All right, let's take this down to here. Don't extend it to the right. Let's make it red. All right. So all of this right here. Right. So now we already said this was a balanced price range because we left it there. Right. And then we get this one fell swoop up, that one candle all the way up. Now let's go back down to the 15-minute. And if you look right here, that's the balanced price range on the 15-minute. And then we left it. So now on the hourly, if all of this get treated as a balanced price range, right, there won't be no reason for price to come back down here. So we can very well, make like an imbalance over here somewhere. If we pop up and get above this high, make an imbalance over here, it would be like highly probable over there somewhere. But you don't guess, you wait and let price show you what it wants to do. Show you what it wants to do. Right now on the 15-minute, right, you haven't been given an opportunity to participate on this rally right here. On the 5-minute, you haven't been given, well, right here, if you were to take it there, I personally wouldn't have taken this off this fair value gap right there. Why? Because I got one below us. But as you see here, this is the same scenario I was talking about. All of this right here being treated as a balanced price range, right? So when price got above there, right, it did institutional order flow entry drill off of this imbalance there. Because if you notice, we got a small SIBI there, right across, right? We got that little small consolidation there, right? Then we got to there. So price came back down to that high right there. That high right there. So all of this right here, the high of that down closed candle to there, treating all of that as a balanced price range. Price came back down to it there and continued to push up. I wouldn't have got long off of there. Why? Because I got a downside gap down there, and that's just my trading style. I've been burnt before, so I just don't take it. But that right there is your entry based off the logic. That's your entry there. I just wouldn't have taken it. I appreciate y'all for hanging out with me this long. That's all I got. Who all still in here? Y'all put a 1 in the chat so I can see who all hung out with me this long. Put a 1 in the chat so I can see who hung out with me this long. Before I wrap it up, do anybody got anything for me? Thomas still in here. C-Walk still in here. I see 16 people. Okay, Erica still in here. King is still in here. Oh, Erica. I'm glad you put that in there. Erica. Those points were this liquidity void here for the weekly. We had a liquidity void. We had this bearish liquidity void here. And we had a bearish liquidity void there. Right there. And I was like, we're in between the tail of two cities, right? Because we got a weekly break-in market structure right here, bullish break-in market structure here. We came up and offered the buy-side delivery to the liquidity void. We came down, offered the sell-side delivery to the liquidity void, and then the liquidity void did its job of keeping price down. Because at the time, the monthly had come up, right? The monthly had a break-in market structure, came up to this rejection block, right? A premium PD array, and started to reverse. So it's in a bullish pullback. Why? Because it's coming back down to this imbalance, to this order block, right? That's the order block on the institutional sponsorship. This is the order block right there, right? You got a propulsion block over here. You got a breaker right there, right? You got all this information down there where the monthly is coming back. So if the monthly is in a bullish pullback, you anticipate the weekly to be bearish, right? So you anticipate the bearishness to the sponsorship of the bearishness to hold up. We got an imbalance there, right? We got this liquidity void we coming back up to, and it's resisting price as anticipated, pushes us down. Now we've come down to the monthly order block. We've come down to the monthly breaker, right? We've come down to the monthly propulsion block, and we anticipate price reversing here. Now that price has hit the monthly, right? We anticipate it to reverse. We need to see the weekly start to support that. We offered the buy side delivery of this liquidity void, came down, offered the sell side liquidity of it, came back up, respected it, closed right at the low of it, came down to the monthly order block, breaker, propulsion block, closed inside of it, respecting it, right? Poked down into a discount, came close to the consequent encroachment of this wick, right? Closed back inside of it, respecting it. So now the weekly is starting to respect the discount PD arrays, but it still has not broken bullish yet. When will the weekly break bullish? The weekly won't break bullish until we get back up above 45, 95, 50, right? And that's on the top side of this liquidity void. Right now, we're respecting this liquidity void. We're below this liquidity void. So we're in between a tale of two cities, right? We're in the middle of the road right now. When you see it, when you see a hint of it on the higher time frames, the lower time frames have to start playing it out. So the weekly is starting to try to play out what the monthly wants to do, right? The weekly is still bearish, but it's starting to support the discount PD arrays, starting with this weekly order block and this weekly liquidity void, right? It respect the order block, respect the liquidity void, but we still have not broken bullish. We're fighting through a weekly SIBI right now. We're fighting through this right here. Why is it such a struggle to fight through this right here? Because we got a lot of buy side and sell side that we've offered here, and then we left this area. This is a balanced price range now. So we're fighting through it, right? So 43.59 to 43.30 is the bottom liquidity void. 45.94.25 to 45.75, 78.25 is the liquidity void above that has the weekly in between a tale of two cities right now. The daily time frame in that same range has broken bullish. The daily has broken bullish. We have an imbalance there. We got an order block here. The daily has come to reprice the imbalance, come to the order block. It's still respecting the discount PD raise. It has gotten a bullish break in market structure. The weekly is starting to respect the discount PD raise, but the bullish break in market structure won't be up until here. So the monthly and the weekly are still at odds. So the daily is kind of lackluster. The daily is starting to consolidate. So now, knowing when we start to consolidate, we can break out our Fibonacci tools. Well, this is the Timonucci. We can break out our Timonucci, right, and come from the low, and we can just set our Timonucci, just put it right in the middle of the consolidation, right? We can anticipate this move at least coming up to try to attack that high, right? If we put it right on the high, we're inside that consolidation still. But if we put it like right at roughly around the 50%, it's pretty much at that high. So we can glean and say, hey, this move on the daily, if this bullishness keeps up, we can anticipate it at least attacking that high. And where is that? A stone's throw away from the weekly high. If we put it at that weekly high that breaks bullish, we're at the top of that consolidation. Right? If we pull out the Timonucci's, it's all kind of stuff too. This is the kind of stuff that I keep in my mind when I'm watching price. And this kind of stuff you can keep in your mind for your swings too. If we break out of this to the upside with more displacement, we already got some displacement here. Break out to the upside with more displacement. If you see an imbalance here at this consolidation, very near this consolidation, you can say, hey, I might want to buy some calls off of that imbalance to come up here and attack this right here for a swing. You're welcome, Erica. You're welcome. Anyway, I appreciate y'all for hanging out with me. Thomas, Seawalk, Erica, Kenya, Lil Hawk, One Spoke, Laverne, Calio. I appreciate y'all for hanging out with me this long. I know I've been on for a minute. I probably should have been trying to watch price to take some, but like when I'm up or if I'm down, I don't rush. I don't be in a big hurry to try to trade if I'm up or if I'm down. If I'm neutral, then I watch the markets a little closer, looking for opportunities. But if I'm up, I definitely don't try to rush it. If I'm down, I definitely don't try to rush it, because if I'm down, I start to force stuff. If I'm up, I want to protect profits, and I'm up right now. I'm up. It's Tuesday, and I'm up. I don't care if I don't take another trade for the rest of the week. I end the week up. Are you right or are you profitable? I'm not trying to get rich quick. I'm trying to take care of my family. Set up generational wealth. You're welcome, Seawalk. You're welcome, Stock Chaser. I'm hungry. I think I got a bowl of cereal in my near future. I just want to say that even though I'm an extremely petty 51-year-old man, it's never my intent to offend anybody. So if I ever did anything to offend you, I'm so not sorry, because I mean everything I say, but I do apologize. because I know it's all about the way people accept stuff. That might sound like a weird apology, but I'm so not sorry. I mean every word that comes out of my mouth, every word. But if it offends you, I apologize for offending you, but I'm so not sorry. Um, I really hope that I help shed some light on some. Oh, that's what I was saying. When I first start trying to understand price action, I'm big petty. I told you I'm petty. When I first started trying to understand how to trade and how to make entries and how to, I wish I had somebody who would sit down and explain it in a way that I can understand it. That's why say the same things over and over, and I try to show you this is why I'm looking at this. This is why I'm looking at this. This is how it links together in my mind. Am I doing it right? I don't know if I'm doing it right. Am I doing it the way that Michael intended it to be done? I don't know. I just know this is the way it makes sense in my mind, and this is what has been working for me. So I share it with you. Just like he shared, this is what makes sense in his mind. This is what's been working for him, you know. And so it's like you have to internalize it. Until you can internalize it, you won't get your aha moment. And that's for anybody that's ever done a one-on-one with me, anybody that's ever been on my lives, anybody. The only thing I want you to take away from it is you have to internalize it. Please take the things that I share, and I hope I share it in a way that you can understand it, but take the things that I share and make it make sense in your head. Don't try to call it a payao because I call it a payao. Look at what the payao symbolizes. The payao just symbolizes the institutional sponsorship, the displacement, the over exaggerated expansion, because we can expand without imbalances. But when we expand with imbalances, that's the market showing you a readiness, a eagerness to go in that direction. But it has to be sponsorship from the higher time frame in place before the lower time frame sponsorship is, I hate to say correct, because you can trade against the grain. You can trade sponsorship against the grain, but know what sponsorship you're attaching your coin to. If you're attaching your coin to the bias of the higher time frame sponsorship, you can hold the trades for longer. If you're attaching it to the sponsorship on a lower time frame that's in opposition to the higher time frame, you have to be Jack be nimble, Jack be quick. Jack jumped over and burnt his. That was for you, Rocky. That was for you. Hey man, that's all I got for y'all, man. If y'all got something out of this, I'll appreciate it if you came back and joined me on the next one. Oh, and if you stuck around this long, if by any chance you are a consistent trader and you want to take a shot at trading evaluations, I currently trade with Apex. I have an affiliate link in the description. Right now, my affiliate link is good for 71% off. They are running a 71% off sale. I know it says save 50, but go in. It should take off 71%. If it doesn't take off with the when you click it automatically, just change the code to save 71. But it should take it off automatically because that's what they said. They said all affiliate links will automatically take off 71%. So if you're not consistent, please do not waste your time buying evaluations. If y'all got something out of this, put an eggplant emoji in the comments after this video gets saved live, and I'll know who stayed all the way to the end. Big black petty spider gone.